I'm Todd Gordon, and I can't believe it. It's been 8 years since I launched this business, and what a ride it's been. Welcome to TradingAnalysis.com. We're one of the leading education, analysis, and trading alert companies on the internet. We are a team of devoted professionals who trade our capital in a live, transparent manner to show you what the life of a trader is actually like. Keep in mind, this is an industry filled with smoke and mirrors, with cheap sales and marketing tricks, so it's been my mission to run an above-board, transparent, and brutally honest operation to serve our clients in the best way we know how to prepare them for life in the markets. Every single day, we offer video and written analysis for the major trading markets, including stocks, stock options, cryptocurrencies, and Forex markets. We offer live and clear-cut and actionable trade alerts in these markets, and they're sent straight to your cell phone and posted in the members area on Trading Analysis. Once the trade is out, we certainly don't leave you hanging. We follow up on every trade, whether it's a winner or loser, and we'll conduct post-trade to TradingAnalysis.com after this show is over. Take a trial today and join us in our community. Let's get back to the show. Hey guys, go probably kick someone's ass and then you're in.
I was going to say, Alex, you know the borders are wide open on Texas. You might as well just
I know.
Walk across.
I know that.
Let's smuggle him in.
Yeah. I can just walk in, but
I'll
we talked about that.
Corvette, we'll run back.
Yeah, that's a good plan.
We got a fast getaway car.
Hell yeah.
That's a good plan.
So the first 5 minutes, we decided we're bringing Alex in to put him on the ticket in Vegas. We're smuggle him across the Mexican border, put him in Terry's Corvette. He'll be there about an hour and a half for fight time.
Yeah, that will be great. Actually, I will be doing that.
Oh my God!
If you ask me, but
well,
yeah.
Holy.
For a new decision point. So I still think we don't have enough data to be convinced that these things are going to continue moving at a higher pace lower.
Got it. Yeah,
it's not enough for me.
Yeah. And I think we just have to realize, and sometimes I like to just take as much of the annotations off the charts as we can, and I can't take the trend line off without a few extra clicks, but it's important to realize that we have been sideways. We're at the exact same price as we were in May of 2022. I mean, here we are in March. We're only 2 months away, and good God, and we'll show you a couple different wave counts, a couple different interpretations. And by the way, I think we're gonna unveil a wave count that I don't think anybody else is watching, and this is a count that we're starting to look at closer and closer here within trading analysis. That again, I don't think anyone in the Elliott Wave community has looked at this, and if you guys have seen it, certainly let me know, and we'll back into it. But the market's been sideways since again May of 22. You know, what is this decline? You know, there's all sorts of debate in the Elliott Wave community. Certainly no shortcoming of Elliott Wave that we all can't agree on what the current wave interpretation is, because if we did, then we would all agree on exactly where the market's going to go. Well, you know, this is not an objective art. I don't know any, you know, for
our usual 786 retracements levels, and also we have a degree violation if we count this 1-2-1-2 at certain point. So I'm very careful what's going on here, and I'm on my tip of my toes, because a kind of a sustained break or attempts for a week or two to break this trend line, or even a couple of days, and reaching this close to this invalidation levels, I think we're gonna have to kick in with a newly presented wave count, which you're gonna show later. But I mean, I'm usually feeling uncomfortable when I do have a bullish wave count, and currently we are testing that very heavily.
Okay, yeah, I agree. So, you know, I think the big thing that, you know, our big takeaway as we move into, so W is your zigzag, X is your connector, then you go into a Y wave, and that would be just more sideways price action into the summer, and that could be right in the middle, neither a hard landing nor, you know, no recession or extremely soft landing, perhaps a recession that's already happened, and we're starting to come out of it as we finally get clarity as to where the Fed is going to go. And again, Alex knows this, when him and I traded FX together for a long period of time, it's not the absolute level of interest rates that will disrupt an economy or a business. It's the uncertain rate of change. It's the uncertain future, because you can't account for that. You can't budget for that. So the uncertainty of when the Fed's going to stop is what's leaving the market sideways. And I don't think people are going to sell stocks and just, you know, even if we go to 5.5 or 5.75 or even 6, is that enough for people to forego stocks and go into 6% savings when, you know, for now inflation is going to be at least 4, 5, 6% for the next 1 to 2 years? You're still just breaking even on your money. And I think earnings that we're seeing, I mean, Lowe's came out strong this morning. We've seen some decent earnings reports. I still don't think it's enough for people to make the argument that they want to get out of stocks. So we just need clarity as to where the Fed's going to go. So
yeah, let me just give you one comment on that. If you can switch on the previous chart with the bearish scenario. So yeah, I mean, to your point, that's a humongous drop down to this 3,000, 3,200. I mean, from the perspective of rates, where we need to be that this actually happens. I mean, 5.5, it's not going to do this.
I tend to agree, Alex. I think this is, I agree. You know, I mean, earnings have not been that bad. You know, the whole market is pissed off because the Fed's not going to cut rates. Well, you don't want them to cut rates. You know, if you cut rates, something bad is happening. You want rates at 4, 4.5, 5%. See, that's a normally functioning economy. Forever, people wanted the Fed to raise rates. Now,
but I mean, core CPI is at 5.6. So, I mean, we are going down. So we didn't go up in inflation. So, you know, so it's just kind of a measuring where they're going to stop and how they're going to assess data. And then doesn't call for 3,000, in my opinion.
Yep, I agree with you. So let's take a look at the NASDAQ here. Let's try to square those up. So bullish NASDAQ count is going to be This is an interesting one. So we're pulling back, and Alex did this count with an A, B, C. This would be a running flat.
Absolutely.
Right, you are live.
All right. Hello, traders. Terry Long with tradinganalysis.com. Hey, I want to just show you, today's March 1st, right? So we just ended the month of February. And, I track this daily chart with weekly ranges as well as monthly ranges. So the S&P did decline 2.6% in February after a 6.2% gain in January. For the last 2 days here, we're flat essentially. This morning I was looking at the close, and we were. It was real interesting that sideways action there. The more important thing though is just what you were talking about. The S&P was weakening 2.6%. Look at the NASDAQ. The NASDAQ only fell 0.5% in February, right? So a much stronger performance, even in the face of a decline, a mostly sideways to lower decline, trying to play a little bit of catch up, whereas we did get that golden cross formation in the S&P back in early February. As far as sector rotation, so where the action has been, and if you've been, I know you haven't seen us here on the public stream for the last couple of weeks, so let me just animate this back a little bit. And let's go back to the end of January, and let's walk you through what happened in February via an animation. In February, we saw the beginnings of momentum fade coming out of all of these value sectors that had been pushing us higher, right? So this 2.5% decline that we saw in February was led mostly by the fade here in these value sectors, with the energy trade continuing dramatically to fall off. But we actually had weakening performance in all of these values, while growth sectors were beginning to push higher. You can see technology and communication sectors, we were forecasting them way back here when we saw them easily back in January. Trend and technology just peeking into that improving quadrant. And those have progressed to a point now where we have two growth sectors. Communication was the first growth sector to move back in the leading quadrant, and now technology has joined that. I want to jump back to these value sectors one more time, and I want you to notice the separation that has occurred since about right here, where collectively we had all 5 of these value sectors moving lower together. We saw an acceleration in decline in momentum and relative strength in staples and healthcare, basically leaving behind materials, industrials, and financials. I think this is important because these sectors, while they have lost a lot of their momentum, they are still holding a significant amount of relative strength. There are opportunistic plays still to be had, I believe, in industrials and materials, and possibly finance. It's a little bit uncertain as to its direction here. And then the energy does continue to fade. So one of the things I know is Todd's favorite thing to talk about, and Todd, you can jump back in here if you want. This is a discussion of the small cap, mid cap, and large cap value sectors, as well as growth sectors.
Yep.
And what you pointed out, I think last week to our members, was the fact that we have large cap value declining, large cap value declining here, mid cap value declining here. Where's the small cap value? It's not here. The small cap value is actually climbing along with the small cap, mid cap, and large cap growth. It's really interesting that stocks within that small cap value grouping are actually still pushing in an outperforming mode, right? So what have you got? You got anything to add to that, Todd?
Yeah, it's. I had the same chart ready to go, looking at the iShares rather than the Dow Jones. It's amazing, though. I mean, the main point is, even though the indexes are this, and this is the most important thing that I think the trading analysis team can put in front of you. Here's your biggest takeaway. Value has rotated in, as Terry just said, via healthcare, staples, utilities, energy, if you would consider that to be value. The earnings growth that we've seen makes it more of a growth, whatever. But we've seen those value stocks rotate out after they were being in favor. Those boosted the indexes. Large cap growth has gotten slaughtered, as we know, has got off the mat, has bounced back a little bit, which has allowed the indexes to go sideways, relating back to that last point of being in triangulation. What Terry's showing you here is, and this is really our main focus, and it's outside the scope of this little half-hour session that we do, the small and medium cap growth are the sectors and industries, are the industries and market capitalization stocks that are rotating in. They're obviously not large enough to move the indexes, but what's happened, as I said, just to repeat myself, value is strong, boosting the indexes is coming off. Large cap growth got crushed post-pandemic, has come up off the mat, and now they're kind of at a standstill. But what's happening, as Terry is saying, is look at small cap growth, mid cap growth. They're rotating in. Large cap growth is as well, but it's further to the left, so it's not showing as much relative strength to the benchmark. So the indexes can go sideways, and we might go into premium collecting mode with SPX, NDX options with our clients, but we're looking at a lot of small and medium capitalization stocks that are moving. Before I went to Park City, I rebalanced the wealth management portfolio, and I dropped the average market capitalization between the growth and the dividend portfolio by 30%. So there's like a stealth bull market going on in stocks that don't move the indexes. And if the Elliott Wave community wants to beat their head against the wall trying to find the right wave count in the indexes, fine. I think trading analysis, guys, we're going to be focused on the small and medium cap that are moving. And then just to bookend that point, see how small cap value is moving right with small cap growth on Terry's screen. It's a small cap driven market. Even small cap value is moving here against where large cap, mid cap value is going. So you have to be a stock picker in here. You have to. You can't be just trading the indexes unless you're trading them sideways or trading FANG or large cap growth. This is a stock pickers market. And Terry and I, like literally, I was up at 5 o'clock this morning. I've got spreadsheets across all 7 feet of my monitors. Like the data Terry and I are mining, like, but that's what it takes in here, right, Terry? I know that doesn't help you as the end user, but adapt or die, right?
Sorry, you lost. I got hung up there.
What's that?
I had to refresh the vMix. Sorry.
Oh, got it.
Yeah, exactly. That's all I've got, Todd. I'll hand it off to you or Alex. If you
good stuff. Alex, you want to roll?
Yeah, sure. Much going on, just to look up of macro themes here. So let me just European side, but just to give you the outlook, what's going on rates. We do track US rates, but just to follow up on the European one, because they lag. So as you can see, market, what is predicting is actually we go up until the August, October, up to 3.9, close to 4%. And then they're pricing in a pretty sustainable move down to 2026 back to 2.5%, which is an interesting observation, since when we track our wave count also on the 10-year yields, we do think we are pretty much at the end of it, maybe in the last push on the upside. Then along the fair, if we get sideways on stocks and a little bit especially if there's hike point and we get lower CPI a week before Fed in the 2 weeks. So I won't be bearish or bullish on dollar so much from here. I think we're going to drop into some type of a sideways price action, and then maybe move before this B wave is done. I know you had the option that this was maybe a fourth wave. I will not, of course, put it aside. It might be, but for now, I think we're gonna stay sideways to just a touch lower on dollar. I'm still gonna observe this until I get the full impulse as a larger complex correction in this B wave. But as you can see, afterwards, after a 5 waves done, we're going to go down in
2029. So it looks like I'm wondering if we're in triangle 4. I'm wondering if perhaps we're doing an ABC flat. We might have a false break above. I think from a psychological point of view, if we get above 4%, it's going to be an issue. Just from the headline point of view, right here, 4%, 3.90 is the old high, break up. And then if we do retracement from the high, you would actually go to the A wave low. 786 retracement is going to be 411 in the 10-year. Now, an alternate count that we're looking at has similar implications here. Let me do them over here in. I have the alternate over here in TD.
So one of the things, Todd, if I can just interject while you continue what you're doing, is something I wanted to say earlier as you were talking was, the move up in the interest rate. Certainly, I don't think people are going to sell all their stocks and just buy bonds. It's not that. But I think with interest rates coming back into a reasonable price area, if you want some kind of stability against the inflation, you're not there yet. If inflation is still 6%,
nope, you're not there yet.
You're getting 4% on the 10-year yield, you're still losing net 2%. It's just a question of whether you expect volatility in the market or not. That said, I think it's reasonable to say that some percentage of money that's been sitting on the sidelines, a little bit of a competition for the market capital in that respect.
Yeah, and that'll cap off yields. I have a hard time thinking the 10-year is going to go above this 4.10, which again is 786. Is it an ABC correction? And then you look at the dollar, what the dollar's doing today, it's lower. Yields are up, 10 years up, I don't know, 10 bips or so. Going back to the US dollar, we're lower today. And the yen has been selling off quite a bit. US dollar index, DX, this is the one I'm following. You look at where we're going here, we're bumping up against the prior fourth, and the dollar index starting to push lower. So can the 10-year longer yields continue to go up with the US dollar under pressure and under technical resistance? I'm not so sure. So if the dollar can continue to break, that would certainly be a good thing. And just looking at the FX market today, it seems to be that this is a euro dollar move. Let me fit this in here. So yeah, euro dollar is up 0.95%. Euro yen is up 0.8. Euro Aussie's up 0.59. Aussie's only up 0.3 Aussie yen. So this is a euro-based move. So interested to see what's happening there. Bonds are a little bit lower, as I said. Yields are going up. But again, what'll happen at the 4% level? And if we get that dollar under pressure, that sends a good signal to the stock market. So let's just finish up a few different things. Let's look at some big cap here. Let's look at NVIDIA. That has broken a new highs right here. So NVIDIA trying to push up towards these old highs. We have it as the midst of a third wave move. Really like to see it stay above 231 as it continues higher. Looking at Apple, longer term, we really would like to see 145 support hold here at an ABC, continue to push up. Meta, I'm really liking this wave 4 pullback. I added Meta back to the portfolio and the growth portfolio for the wealth management side. Meta's getting a little spicy here above 170. Fine. So we had a short on in Moderna, and I put it on like right here. We sent the alert to stop out right about here. I took off for the airport. I forgot to close the short.
Uh-oh.
And
accidentally made money.
it's better to be lucky than smart, I guess. mRNA continues to be one, and I think the wave 4 bounce is very shortable. So there's a lot of stocks we're looking at. There's a lot that we can put in front of you here. Let's take a look at Skyworks. How's this guy doing? Another holding that we're looking at a wave 2 pullback here. So a lot of semis, a lot of industrials in the smaller and medium cap level that are acting well. Whoops, I didn't mean to do that. I was going to show you that later. But yeah, stock pickers market. Alex, sorry your audio wasn't, or the bandwidth wasn't working. But yeah, kind of closing thoughts. Just a quick update there. Sorry we were only doing this once a week. We're doing a lot behind the scenes of trade analysis, and we'll get these public communications more organized and more regular. But right, it was calm.
Hi, girlie.
Skiing with my daughter. She just turned 4. She's doing all right. Get some pretty good Utah powder. This was fun. I mean, this was right in the resort. We had like 3 feet of powder. It was awesome.
You dang near knocked him over there.
I hear it. My
Cameraman was in trouble.
Yeah. And then here's, I still think I'm young, like I can throw cliffs. This is why, I don't know, maybe why my name on Instagram and Fast Money and CBC was Flash Crash Gordon, but not even close to landing. I leaned back so much. Oh, that's not the man I used to be, Terry. All right, well, that was
It was
fun.
nice soft powder and not a big rock.
Oh my God, if you did that on the East Coast, Terry, I'd